Hi, this is Jeffrey here from ERP Seminars. We're just going to give it about 30 more seconds here and get started. The title of the presentation today is Auditing Application Controls in an Oracle EDF Environment. So we'll just get ready in the next couple minutes. We'll get started. Great. Well, it's about 5 after. I think everybody's going to join. They're joining that is going to join for the presentation today. So I'm going to go ahead and get started. Welcome all to today's webinar. Seen quite a few people that have attended the last couple of free webinars that I've done. One related to building an audit trail, and one related to building risk controls related to SQL forms. For those of you that missed those presentations, I will be sending you a link at the end with a link to record webinars for both of those, as well as I'm making this available via that link later today probably. So today's topic is auditing application controls in an Oracle EDF environment. The agenda is introduce myself just briefly. I will talk about some overall risks or system risks related to application controls, look at the PCAOB guidance on application controls, talk about the benchmarking strategies, the risk related to overriding controls at the transaction level, and I'll have some specific application controls recommendations, and then we'll follow up with some IT general controls, guidance, and risks, and this presentation wrap up. So just to give you a little background about myself, I'm a CPA by trade, out of college, and earned my CPA designation. Worked as a financial statement auditor for a while, went into industry for about 6.5 years in controller and CFO roles, and ran the audit from a financial compliance perspective or financial audit perspective in both my capacity as controller and CFO, and signed the audit letter, responded to management letter comments. I'm very familiar with the financial statement audit process. This was all pre-SOX. As a client, I implemented Oracle applications and worked on somewhat of a global rollout for that. So I lived in an implementation and a post-implementation role as a client, and then have consulted for about the last 10 years in various different roles, really focusing on security controls for about the last 5 or 6 years. Many of you know that my first solo book project came out this last summer. It's called Oracle E-Business Suite Controls, Application Security Best Practices. It would be a great resource for you if you are on the IT support, maintenance, or if you're an auditor, external, internal auditors. And I'll be sending a link to give you an idea on how to purchase that book as well. I was contributing author to a book last year. I wrote a chapter on SOD, best practices. I've been published a lot by OEG's Insight magazine in the last 5 or 6 years. I've been published twice by SACA and once by the ACFE in the last 1.5 years. I've got kind of a variety of background, both the auditor and the auditee perspective, living on the client implementation side and the consulting side, and having earned my CISA and CIA designations in the last few years. I think you'll hopefully find out that this is a well-rounded presentation looking at this topic from a variety of perspectives. So, kind of setting the stage a little bit, I wanted to talk about some overall system risks and how they're relevant to application controls. Some of these topics will seem familiar to those of you that have been participating in other webinars, but for those of you that are new to the subject or new to these 3 subjects, they're really foundational and critical to understand as it relates to this particular topic today. So we're going to look at deficiencies regarding audit trails, deficiencies in change management practices, and deficiencies in implementation practices. Or maybe in some cases not deficiencies, but risks and some of the challenges that are facing organizations with those risks. So the real critical thing on the audit trail, and this is, I'm going to go through the entire Building an Audit Trail webinar that you can see online. I did back in September. I'm going to go through this in about 3 minutes here. But the real critical thing here for you to understand is that there is no audit all functionality either to monitor privileged users or to give you kind of a detailed audit trail of what's happening. In particular, what the impact of that that deficiency or that lack of audit trail is when you're looking and understanding the concept of automated controls and configurations related to automated controls. Inherently built into the application, there is no detailed audit trail of changes being made to those configurations. So the example I'm going to go through here is the journal sources form. Journal sources is a critical configuration, critical setup related to the journal approval process, which a lot of organizations have implemented to automate their journal approval, entry and approval process within eBusiness Suite. So this is the journal entry form. My example here today is looking at the source of payables, and the way the data is stored at the database level is this is one row at the database level relating to the payable source, and there's a series of columns that track various information related to this source. You'd have a description field, a separate column for import journal references, freeze journals, required journal approval, and so on. The point really in this example, as I'll show, is you can make a change to one column, and that will potentially trigger the thought that something happened at that record level. So it's going to update the updated by values and updated by date, and that may be a false positive as it relates to a change to a configuration for a automated or an application control. So this is the initial state of the record. We can see that it was initially installed May 2010. This is on install, so it was done by it was updated, quote unquote, by a user called auto install, and it was last updated by auto install, probably another patch 7 years later, maybe adding another source to the table. So the record, if you just note the update date, is January 3rd, 2007. In my example, I'm unchecking the freeze journals checkbox, and that shows my username at the time was JTH9891. The value of that was as of August 25th, 2008 at 1643. So then I'm changing it back. You can see the updated by date is the same, but the time stamp has changed from 1643 to 1645. So I've rechecked that. The way that this would look at the database level, and this is kind of denormalizing the data, if you would, is the initial value would show value checked, updated, auto install, the date after the first change, after the second change. If you're looking at this from just thinking about this from a baselining perspective related to application controls, an auditor would come in or should come in and look at the value. You'd be baselining this value potentially. The value was checked, and then the value after or as of during the audit would come in, and they would see that this value is comparable to the baseline value, which is checked. What would make an auditor, or should make an auditor suspicious or question what's going on in the system is the fact that there was an update to this record. That if this update showed within the audit period, they were asking the question, well, what update happened to this record? Because there clearly was an update the system recorded. The fact of the matter is, as it relates to what's stored at the application level, all you have is the value of that record as of this point in time. All you can tell them is that this value was checked, or the value was the value was checked as of this point in time. You couldn't recall, there was no audit history or audit trail history that said the initial value was this, it was changed to this, to unchecked, and it was changed back to checked. So especially if you have no other evidence that would support this change, like you can go back to a change management process and say, oh, well, it was checked because of this reason, and then it was unchecked for that reason. An auditor, skeptically speaking, should say, well, how do I know your baseline controls or your configuration of this control wasn't changed? Controls weren't circumvented in some way, and then it was changed back. While an audit sometimes doesn't, an auditor has a lot of discretion, I guess, in how much they believe and what audit evidence they're going to gather as of that point. But the point really being, if you think about this in the context of all configurations for all application controls, and none of the values for these configurations have that audit trail history, it could become very problematic during an audit. And in the worst case scenario, well, worst case scenario is you could get control efficiency, not having this audit trail at all. But in a likely scenario, what it could mean is that those controls that are relied upon, the automated or application controls that are relied upon, may go back to manual controls and or may have to go through detailed testing. And the likely impact of that is audit fees may get increased. They may say this was not in scope because you said it was going to be an automated control. We didn't build this to audit plan. And now they're kind of downgrading that from an automated control to a manual control. So that's audit trails. We're going to go through a lot more details on the impact. The other thing I would say a lot of organizations have struggled with is this concept of the completeness of the change management process. So the purpose really of the change management process is to protect the integrity of the business process. Historically, if you go back to prior to ERP days, if you wanted to change the way the system interacted, which is the often majority of the process for the business process, if you wanted to change the business process or the way the application worked, you had to make a change to the code, i.e. you had to check out code, you had to make a change, you had to go through the testing process, and you promote that code to production when it was approved in your change management process. What's unique about ERP systems is that you can make a change through the configuration of the application through all these configurable forms and setups that changes effectively how the code acts at the application level. So conceptually, if your change management process is supposed to be protecting the business process, then the things that impact the way the code works and changes the business process should go through your change management process. Logically speaking, most people would agree with that comment. A lot of organizations have not evolved their change management process or their support process to say that means all of our configurations that are critical, both from an operational perspective and from a compliance perspective, should be going through our change management process. That would require a detailed risk assessment, understanding which of the configurations are more have risk and which ones don't. Some of them are kind of have a very low level of risk. Some of them have an extremely high level of risk. So that's change management, kind of the overall integrity and purpose of the change management process. System configurations are definitely relevant to the design and performance of the business process. The next two things here I'll talk about is SQL forms. And I've got a whole webinar on that I'd advise you to go back and look at. But this concept of allowing a developer or an analyst to change the code related to process without going through change management process, that kind of relates to configuration. It also relates to access or risk related to SQL forms. The impact of SQL forms is the equivalent of giving anybody that has access to those forms, giving them access to the app's login and password in production. Some forms allow SQL injection. They allow any DML, a data manipulation language, or DML select, insert, update, or delete at the data level, or a DDL process to trunk, alter, delete tables, structures, all those things. In essence, that whatever privileges are held by the app's password, somebody can do through a form, and the reality is a lot of organizations don't have proper controls or even understand the risk related to that. So that's a whole other topic, of SQL Forms webinar I suggest you guys look at and go into more detail. I've got a couple forms that show examples in there and go through risks and suggested controls related to that. And the last thing I'm going to talk about is just briefly implementation practices. Without going into a tremendous amount of detail, a lot of times the way the security is developed is starting from a principle of great privilege. So you start with a super user menu or a very powerful menu, and what gets excluded off is what is being perceived as not being needed. Oftentimes that is different than starting, the end result would be different than starting and saying, give me only what you need to do your job, and building menus from scratch to meet those requirements. So conceptually, a security guy or an implementer would say, yeah, we're using this concept of a principle of least privilege, but oftentimes the security really isn't down to the lowest level. And not only that, but the way the applications or the custom responsibilities are often built is using standard menus. And even if initially they are built with a principle of least privilege, most organizations don't have a very thorough, what I call security impact analysis that needs to be done as it relates to patches. And there are things that get inserted into those menus or sub-menus that give users access to new features in the application that they may not need, or maybe access to sensitive data. And a couple of examples there, I would just say, I go into a lot more detail in the book on this, just two examples, is upgrading from 11i to R12, this to a menu that typically is used for purchasing, which would give a buyer access to supplier entry, which is generally not a good thing. And then the inner journals, there's actually the ability to enter a manual journal inserted in various subledgers throughout the application. So within the setup menu for subledger architecture, there is the ability to enter a manual journal. So effectively you can enter a manual journal entry via an AP login or an AR, order management, or purchasing, which would circumvent the controls related to inner journals that typically are built into the GL module. So having said that, a little bit of background, now we're going to dive deep into auditing application controls. I would say, as you guys have questions throughout the presentation, there is the questions box. I will be spending quite a bit of time at the end of the presentation. So if you have any specific questions about some of those topics that I've already covered, feel free to jot a question down in the questions box. We'll address those back again towards the end of the presentation. So now looking at specifically application controls, I've got a couple different pieces of guidance here. One is, as a CIA, I often turn to the Institute of Internal Auditors Global Technology Audit Guides. Very good. There's a lot of good information there, a lot of good best practices. So whether you're an auditor or an IT manager or somebody designing controls, I really recommend looking through the Global Technology, the GTAG guides. There's, 12 or 13 or 14 of them now, covering a variety of different topics. So they've come out with one, GTAG 8, specifically talks about auditing application controls. I actually have a white paper out on this where I've interpreted this that I will send to you at the end of the presentation. And here's what the guidance says. It says, in essence, as it relates to application controls, the nature and extent of the evidence that the auditor should obtain to verify the control has not changed, may vary. But in essence, what you're looking for is that benchmarking strategy for a particular control. Auditors should also consider the effect of related files, tables, data, and parameters to the application control's functionality. So what this in essence is really saying is you should be looking at the change control process and the whether or not the configuration related to the application control setups have changed from the original baselining period to the time of the audit period. So that first thing, look at the system, determine whether application control setups are changed. And then second thing is reviewing the reliability of the change management process to ascertain whether the baseline values can be relied upon. So practically speaking, back to my example of journal sources, if journal sources is one of those critical configurations, you're using the journal approval process, you would have that baseline value. There's a lot of different ways to baseline values, but let's just say it's on a spreadsheet, and that spreadsheet documents all or screenshots or something that documents all the baseline values as of the beginning of the period, as of January 1st, 2009. And then they're going to come back. Let's say their audit is they're looking at the application controls and their field work in November or December. They're going to pull values and say, have any of these things changed, specifically looking at the setups. Well, if you don't have that detail, if there has been a change, that last updated by value is updated for various reasons. It could have been something else on that record was changed. It could not even be related to the journal approval process. It could have been the description was changed, or it could have been something was added to a descriptive flex field or something like that. If that has changed, then they're going to automatically say, well, what changed about that? And if you're going through this process of trying to justify what was changed on that row, And then a lot of times what they're going to say is, well, let me understand your change management process. Is your change management process effective and thorough? In other words, would it have caught something if something was changed inadvertently? Or can you document, or can you show me where something else was changed on that record, even though it wasn't something related to the journal approval process? So those are the kind of the two concepts, looking at the specifics of the application control setups, and then if you don't have that detailed audit trail, they're going to fall back upon the integrity of your change management process. So the other thing that's important to understand is, so as I talked about this, for application controls to be relied upon, you need to review setup specific to the application. Then that other thing that you have to understand is that oftentimes system-level controls or defaults can be overridden at the transaction level. IT to general controls, I'll go through some examples of these. So benchmarking, that's the first step for you. It should have been the first step. Let's say 2009 was the first year you're relying upon automated controls or application controls. You should be benchmarking setup specific to the application control. And it's all things related to the application control. So my example here, related to both, too often or normal application controls would be the PO approval process and matching requirements related to that. So if you're using a workflow process, then the components related to that particular workflow, and there's a lot of different tables that store workflow components, all of those really should be baselined and be part of the change management process and have that detailed audit trail associated to it. Then you have other things like approval groups, approval assignments. You may be using the AME module, the approvals management module. There will be a lot of things within that should get documented. And then you may look at things like document types or line types. And then you have values that may override, like, for example, the supplier, the matching requirements could override these at either the supplier header level or at the transaction level. So let's just say, as an example, your policy within purchasing is that all POs are three-way matches. That would require the PO or a receipt to be entered against the PO, and then before an invoice gets matched or before an invoice gets paid, you have to have a receipt associated with it. The problem with the way that the system works outside of the box or out of the box is you may set that document at the line type, but that can be overridden at the supplier header level, or it can be overridden during the transaction level. I think I've got screenshots on examples for that. So here are my screenshots. So setup values are established maybe initially in the purchasing options. You have the match approval level set at three-way, and the line types, it can be overridden. So if some line types could require receipts, and some line types could not be required receipts. A lot of times organizations for services would not require a receipt, and the alternative would be when the invoice comes in, that gets sent out for approval. Goods-related stuff, depending upon what the goods are, if they're capital goods or inventory, you may have a requirement that those come through and get received. Maybe whereas an expense good like office supplies may not have a receipt requirement. So you want to understand the values of your line type setups. Here's an example at the supplier header level. Match approval level could be overridden. This would, again, override. Well, it would default. Nothing would override the transaction level, but it would override the value in purchasing options, and I think it overrides the value at line types as well. But here's the big gotcha as it relates to three-way requirements, is that when I'm back is the purchase order form, I'm defining specific shipments. It defaults this value, the match value, based upon your line type, but you can override it when entering a transaction. So, for example, if you are trying to fully automate this control, you may have to put a forms personalization in here that restricts the user from overriding the match at the shipment level, which is tied to the line level. You may also restrict the ability to override this at the supplier level, and then in defining the line types, you may need to make sure that all line types are set up receipt required. and make sure that any changes to line types in the future and any new line types go through your change management process so that somebody can review that from a controls perspective to make sure that a line type doesn't get set up related to a two-way match. So for your application controls to be effective, and this is, think about any application controls you have in your system, whether it's internal approval, it's hierarchies, it's matching, it's requisition approval, any kind of workflow process. You have to understand, you have to know your policies and procedures well. What is it that my organization is expecting out of this process? Does my policy say that a PO has to have a three-way match, or does my policy say that I have to have a receipt against a signature on a PO that is a two-way match, a signature at the invoice level? So know your policies and procedures well. Know your process, both outside the system. In that case, if you've got a two-way match and you've got to go through and you've got to send an invoice out for approval, know that process well. Make sure there's audit and control or controls related to that, or monitoring of those things. Make sure all system-related setups and baseline required changes for those system-related setups to go through the change management. Think about the whole. It's got to go through, be documented, be approved, be tested, be signed off, go through your change management process, be post-change reviewed, improved, and accepted, all the things that you've got built in your change management process. And then now think about this concept of if your application security wasn't built with the principle of least privilege, or you've implemented a long time ago, and you have a bunch of patches that have happened, and potentially those patches have added some setups or some objects to other people that perhaps aren't approved or qualified in making these changes, don't understand the impact of change management. Therefore, you may excess access to some of these setups and objects that you need to interrogate the system to make sure that there aren't people that have access to those critical setups that shouldn't. I'll give you one example there, that in some organizations, changes to chart of account values or the value sets related to chart of accounts is a key control, or is a supporting control to a key control. And what that means is the values for those accounting key flex field or chart of account setups should only be maintained by the accounting staff. However, if you are in purchasing or AR and order management, you have access to maintain the value sets for those applications. That also gives you the ability to maintain value sets for the accounting key flex field or the chart of accounts. So that's kind of one of those shared settings that a lot of people have access to, and depending upon how you define your controls, you may or may not have, you may have some exposure as it relates to access to changing those chart of account values. And there's obviously there's other mitigating controls down the line that may catch that. So it's not the end of the world if people have it, but it may just be some exposure you have. Auditors may come in again and say, well, let me understand, what your controls are for monitoring changes to value sets for chart of accounts. You don't have an audit trail built on those tables, so you don't know for sure that the only changes were being made were by your GL group and not by some other group. So again, it just making the process more difficult from an audit perspective. It could, depending upon how difficult your auditors are. It could make the audit fees go up or make the scope expand. So changes to the next point, changes to setups and objects related to application control should be audited. Again, all those should go through change management, just like you'd expect your code level changes to have some type of system-based audit trail to pull, to sample, to make sure that your change management process is complete. These same setups, objects being things like workflow objects, those should be audited at the table level. You should identify the tables and the columns that are critical related to this as part of an overall risk assessment process. and then you should deploy what I believe is typically the best solution is a trigger-based auditing solution to build that audit trail, so you have a system-level audit trail for those changes. So that's application controls. And I'll talk specifically about next concept is more discussing the ITGC component of this. So general computing controls, or ITGCs, would be things like change management is one of the critical things. Your user provisioning process, something else. So why are IT general controls so important? And going back to the commentary in the IIA GTAG guidance, it says that the IT general controls that monitor program changes are not effective, then unauthorized, unapproved, or untested program changes can be introduced to the production environment, therefore compromising the overall integrity of the application controls. So I've alluded to this. This specifically calls it out. If your change management process is not effective, in essence, the risk is unauthorized, unapproved, or untested changes that could compromise the integrity of that application control. So the important thing is to understand some of the more common change management process problems. I think I've alluded to a lot of these, but I'll specifically call them out. So ask yourself, I guess, is your organization have some of these deficiencies? Are you too narrowly defining change management as IT changes? IT changes being just things that are code related or development related, whereas the configurations or critical setups should also be lumped into that basket of things that need to go through change management. Oftentimes, if you've got a business analyst or you've got end users that work outside of the IT organization, you need to develop that non-IT executive ownership for the change management process. So you've got a business analyst sitting in the purchasing group that has access to critical purchasing setups, or in the accounting group related to GL setups or FA or something. That ownership, that management in those organizations need to understand that the integrity of the process must be protected, and therefore, the next thing you have to properly identify the setups that impact those business processes. You've got to put those through the change management process. You've got to develop the necessary audit trail to test for unauthorized changes. You've got to revisit the security potentially on those, i.e. my comments on like value set maintenance would be relevant. And then you also have the risk of unintended or intended SQL statements being run from SQL forms, or the forms that allow SQL injection in them. That it could change and override those processes. That becomes even a bigger risk when you talk about fraud. But even as it relates to, sometimes in a production environment when things are being supported and firefighting is done, sometimes the developer and analyst will do whatever it takes to get through that process, and sometimes that gives them, they can do that through access through things like SQL forms. And the last thing is the general bucket failure to maintain documentation. I am writing a series of audit programs right now, and one of the things that an auditor normally would do is review documented setups or configurations and compare those to the actual systems. The documented setups would be like in a BR100 or a BR110 from a methodology perspective, and they would that should get maintained as configuration changes are being made and things go through change management. So maintaining documentation is important, and it makes life, if nothing else, it makes life very difficult or a system very difficult to audit if that documentation isn't maintained. Another critical thing, obviously, from documentation is rolling out and making things standard from country to country or business unit to business unit. So that is kind of the gist of the presentation for application controls. A lot of logical things that you would think about need to be done. I have typically seen organizations, have some considerable risks still as it relates to these audit controls or application controls. So hopefully this was a helpful presentation. I am going to go into the Q&A session now, and so if you've got questions as we go, feel free. And I think we've got plenty of time for Q&A. So I'll just give you a second to think about that and start firing some questions at me. We do have the first question in from Nick. It says, regarding program change risk could you speak to what you see clients identify? You've seen clients identify changes to database objects, tables, packages, procedures. Is looking at the DB objects table a viable means to do this? What are the shortcomings? Configurations stored in the table would have to be evaluated separately. DB objects table is a good table. I think the problem with using that is there's a lot of things in that table. There's a lot of data that goes in the table. So from what I have not built programs or audits related to the DB objects table, but from what I've talked to from other people, they've had to filter out some of the data that's stored in that table to get back to what are true object changes as opposed to, changes that are happening through patches and such. I've got a document on that, and I can talk to you offline a little bit, Nick, on that subject. So next question comes from Steve. Am I correct that an upgrade to 12 will only affect seated menus, permission sets, etc., and not custom menus, permission sets, responsibilities, roles? That is correct. Let me just make sure that I can restate that. So if you have used completely custom menus, let's talk about menus, and that would mean not just the menu itself, but all the submenus associated with it. So if you're, for example, in my supplier example, the AP Navigate GUI 12 menu is the highest level of privilege in the payables module. That menu, the menu related to the new supplier manual, if you will, in R12 is not at the top level of that menu being added, but it's added at it's added on the AP Suppliers GUI 12 menu. And actually it adds a whole lot of layers down below. That menu, the AP Navigate GUI 12 menu actually has 8 layers down. It goes down to the lowest level of function for the supplier management menu. So what it would mean for you if you wanted to avoid the impact of patches, just as it relates to menus, you have to have completely custom menus and completely custom submenus. Because custom submenus, my other example is the setup submenu within AP or AR. The whole SLA architecture was added as a submenu to the setup submenu in each of these various modules. So for you to have avoided that submenu from being inserted into those menus, you would have had to have completely customize the setup submenu in all those. I would just say on this, from an auditor's perspective, I would love to see completely custom menus and completely custom submenus developed. Practically speaking, that is a lot of work to go from what most organizations are using standard menus to completely standard submenus and completely standard menus, or custom, I'm sorry. So there are a lot of trade-offs in that. The problem with using standard menus is most organizations don't have a good process, and the technology isn't there within the standard EBS application to do what I call the security impact analysis. So in an ideal world, when you're doing any patching, you'd want to run some type of comparison tool between what's in production and what's in your patch instance, and understand what new functions have been added into what menus and submenus throughout the application, and then you would evaluate whether those changes are appropriate or not appropriate. If that was in place, if you had a good security impact analysis process, then I would be more comfortable using standard menus and submenus. Most organizations don't have a security impact analysis process, and only end up finding these things sometimes, months or years afterwards. AZN menus are another great example. Introduced in around 11.5.3, the AZN menus were introduced throughout a bunch of submenus, and they added a whole bunch of new functions, in essence, that users could access. If you had, let's say, for example, you had the supplier submenu filtered off for an AP clerk or an AP lead because you didn't want them to enter suppliers, the AZN menu gave them the ability, or re-gave them the ability, to enter those suppliers, which would be a critical flaw in your fraud prevention policy. So that's a whole lot of discussion on this. I can go into more detail on this. I'm going to move on from that if you want to talk in more detail offline. I've got a lot of discussion on this with details in my book as well to refer to. Is there a way we can prepare a log of object changes, DDL, versus actually approved for production migration? Not easily. There is no integration with that. Really, you need to have a log in your change management process. There is no tool or anything that I know that integrates there's no change management system that I know of that fully integrates and checks those versus what's happening at the application level. So it's, to me, I don't know of a simple way to do that because the number of object changes is so extraordinary, especially the DDL stuff when you're patching. I think it's just, I don't know, there's no easy solution. That's all I can say. If there's an easy solution out there, I'd love to hear it from somebody. So let's see, Steve, you recommended to require changes to go through a change management process, but cannot ICM be used to notify of changes to appropriate staff automatically? If so, why would you want to add it to the change management process? So if you're using ICM, I'm assuming you're referring to Internal Controls Manager. And my understanding of ICM is that it is very limited in the number of objects that it tracks, and it's not extensible. So if you deployed a based auditing solution that had all those objects, and then you had a notification process on top of that would notify those critical object changes, and then whoever's getting the notification of those could verify whether or not those changes are approved. That would be a minimum. You still would need to go through the change management process because the impact of those would have to be signed off, not just the operational impact, but also the control-related impact. So, for example, if you're adding a new line type that if your policy says three-way match and you're adding a new line type that says two-way match, depending upon who gets notified in that, in essence, you've provided a way for somebody to circumvent your policy. And that policy is in effect for a certain reason. It could be for your SOX requirements, your SOX compliance. It could be from an operational perspective. It could be fraud prevention. So those changes from a change management perspective need to be reviewed, not just from an operational perspective, but from a compliance perspective, which is kind of another topic. But my understanding specifically to ICM, even if it does not, it's not extensible and it's not comprehensive in its identification and auditing of those objects. Do you typically see, I think this is Michelle next, do you typically see program changes and configuration changes as processed by one change management team or one team in IT and a separate one on the business for configurations? Very good question. It all depends on where those changes are being done. I mean, in essence, you could have a separate IT change management process and a separate configuration change process if that's what your organization decides. I see the value in having those separated, and I see the value of having those the same. The important part would be if they are separated from an approval process and a management process, the configuration changes would still need to follow the same process or a very similar process to maintain the integrity of the change management process. I think you'd understand, hopefully you understand the comment. You still would want to, in my opinion, develop a trigger-based audit trail related to that, and you still want to do some type of change management completeness process or change management audit for those. Set your sample size depending upon the level of risk. So I think that is highly dependent upon more of the support model. Some organizations have those configurations and support in IT. Some of them have in the business, and there really is no right or wrong answer. The critical thing I would just say from an application security design perspective, one of the critical things is that the configurations, in my opinion, should not be done, the changes should not be done by people that also are doing transactions. So if you have I would break out if you have a super user or a business analyst on your functional side of the house, I would rather see those configurations being done by somebody else, just because it is easier for that person. It prevents them from circumventing controls. That's really what it comes down to have it in any one person's hands, versus breaking the transaction, like entering POs, having a buyer be your super user, for example. There's the temptation and there's the possibility there that they can circumvent controls during the process, versus if it's broken out into either a separate support person within purchasing, if it's on the functional side, or someone in IT. They're going to be that essentially you're segregating your change management process, and the approver is going to be different than the change implementer. I would just recommend going back, like there is an IT change management best practices document that GTAG has put out, and it talks about how the segregation of duties should work within change management. And one of the things that it certainly emphasizes, and I agree with, is that the approver, or in this case, the person that's going to do the testing related to the change management, or even the person that's doing the configuration, should be different than the person that's doing the implementation for various risks. So again, I'd be happy to talk to you offline on this. It really kind of depends on the structure of your organization and what other risks. If you had a very detailed trigger-based audit trail with the notification process, then you're mitigating a significant portion of your risk, depending upon, really comes down back to operating effectiveness of that control. Are people really looking at the alerts? Are they understanding what the alerts are doing? Do they really understand the people that are looking at those changes? Do they really understand both the process and controls defined and the system impact of that change? So Steve, 90% of our responsibilities, menus, submenus, permission sets, roles are all custom, so that's good. That's kind of follow up on the question you had earlier. That's perfect. You obviously understand your risk really, then it comes down to the 10%. I'm assuming those 10% may be in roles that are granted to maybe your support analysts, your business analysts. And I think there's some validity in having business analysts. Again, I don't like giving people that have permission, access to setups, also giving access to transactions. But that's good the way you've developed things. You're ahead of the curve there. Nick, what resources do we recommend to understand a suite of related configurations specific to a particular module or class of transactions? Oracle users guides, implementation guides, other. I would recommend hiring me to help you with that, Nick. So that's my sales pitch. I can do that very quickly. I've done that with several organizations. Absent that, if you're trying to get a handle for that internally, I would use a combination of sitting down with your business analysts that support those modules and Oracle's users guides throughout the application. It is tricky. I can help you work through some of these things because some of them are fairly easily documented, and this is it's something I can help you with limited consulting on specific modules. So users guides are a good example, and then I would say also use your business analysts. But my favorite phrase as an auditor is trust but verify. So some external validation, whatever they're giving you, I think would be prudent. Jeff, is there a way to, David's asking, is there a way to identify sensitive forms subject to SQL embedding, or is access to one form sufficient to obtain access to any database table via a SQL embedded statement? That's actually fairly well documented in the MetaLink document 189367.1. The only thing that is not in there that I'm aware of is a quality plans form. And the list is, this list I'm maintaining as well in the internal controls repository. So if you're an end user, you can get access to that. I've made the list user friendly. All of the functions, you cannot get access to that through, has to go through a security process, or it would have to be embedded in an existing menu that somebody already has. So again, I maybe refer you to the SQL Forms webinar I did. It's free. You can download it and watch it when you have some time. Let's see. Next question here. What about the screens that allows you to do multiple setups, flexible values form? If you have access to those, you can change not only the accounts, you can change a lot of other values. Is it a good solution to implement personalizations, for example? Absolutely. If that is a critical requirement, Carlos, for you, then I would definitely suggest putting a personalization alignment on that form. You could also change your control definition so it's not a key control, and then put an audit process in place to audit those changes and just make sure to your GL group, and they would or maybe even a report, they would sign off and review to make sure there wasn't somebody outside of GL maintaining that. I don't really think that's a good key control. I think the controls that we better define that all changes are being made by, or all configurations are being evaluated as part of the financial close process. Put it at the financial close process at a higher level as opposed to specifically related to chart of accounts values. Generally speaking, if there is a value inserted in the chart of accounts and it is unauthorized, really kind of depends upon your security rules and your cross-validation rules, but if something happens that's unapproved, it should get caught during your financial close process. Your review of your P&L, your reconciliation, your P&L, your balance sheet's got a balance. Those should fall out. So again, I can talk to you offline. Personalization is a good option as well. Okay, so next one, maybe our last question here. So if you got more questions, please insert those. But Pavan, what would be good practice of access controls, especially support implementation team members in production? Oh, that's a 2-hour webinar. It really kind of depends on the maturity of your organization. I would say you need to start with a good risk assessment. Recommendations separating transactions from configurations at a generic level. There's some logging I would require of certain users and certain forms. So separating transactions. I'm just typing some notes here from setups, some logging of some activity, some manual logging that would happen from them. And then what would be very critical is the deployment of a trigger-based auditing solution on the steps and SQL Forms. So there's really where you're at right now and where you need to get to put better controls in place for privileged users kind of depends upon how much time and effort, money you want to spend on it, and what level of perceived risk you have, and whether you're focusing just on SOX risk or you're focusing on fraud risk as well. So that is the last question I have. If that is the last question, one more here, Michael. Would you, generally speaking, distinguish a configuration from business data? Is organization units a configuration or just data? We discuss this frequently. So business just data. I can talk to you offline on this. I guess I would be curious to see where you're getting hung up on this, because to me there's a fairly easy distinction. I kind of 3 buckets. You have transactions, like AP invoices, AR invoices, purchase orders, requisitions would be transaction. Then you have master data, like item master, supplier master, customer master. Those have their own unique set of risks. And then you have system configuration. And that's kind of almost everything else. So, you know, the examples I've gone through today is journal sources and line types, document types. Value set maintenance. I guess you could say value set values kind of overlaps that a little bit, because those have an impact on the transactions. But I view those still as configurations, because they can impact the way the business process works For example, you can change the lookup value, and that lookup value is relied upon from a list of values, or from an interface, for example. Value sets could be used to drive interface values. So because of the potential of those impacting the integrity of a business process in some way, I'd say those are more configuration related. And often those are things that are also relied upon from a controls perspective. So if you want to talk specifically about that, Michael, I'm happy to have a conference call to follow up. If you're struggling with how to handle a particular set of forms, more than happy to talk through those with you. So any more questions? Okay, I just do have, from the slides perspective, I didn't leave up my last slide. I do offer, a variety of services that I do on this topic. I think you'll find that there's nobody more well-versed in application controls, internal controls, and security, controls definition, and in general SOX compliance and fraud compliance than myself. I can help in a variety of different ways, very small, short engagement, not coming over to take over your internal audit group or your risk advisory group in any way, but maybe supplementing some of the information you're getting from various sources in your organization. I do some software implementation work, have done RFPs and helping people understand what requirements they have and matching those to various different tools in the market. So I'm happy to work with you guys on that. If you're struggling, in particular if you struggled in the past with not finding some decent values in the software market, I can certainly help you find some good values for SOD monitoring. I do offer a SaaS offering for SOD. In conjunction, the process was designed by Chaosys. I use their software for that. My SOD content, which is bar none probably the best in the industry, is also embedded in their applications. So if you have any questions, my contact information is up there. I'll leave this up for a few minutes, and I'll send you some follow-up information, including copies of the slides, the white paper that relates to this, the link to the recorded webinars, and if I miss anything, feel free to respond back to the email. But with that, I'm going to close down the session for the day. Thank you for your time, and feel free to certainly shoot me an email or give me a call if you have any more follow-up questions. Thanks, and have a great day.